Oof, guys, ouch. This is not looking so good for these two stocks. They're completely collapsing right now after these companies reported earnings this morning. And let me tell you guys, their numbers are not that pretty. We have a lot to go over in this video. So if y'all find value, hit the like button, make sure to subscribe. And of course, don't forget to get up to 16 stocks for Moomoo, each up to $2,000. Use that link down below. The clock's actually ticking, guys. You only have a couple more days to do that. So get on it. And make sure to follow me on Twitter at StasserFest or Stas Talk Stocks, whatever you want to type in, either one, you could find me on there. Make sure to go follow me. And with that being said, cheers, guys. Let's dive right into the video. So the markets in general right now, all the indexes, and mind you, it's only 10:45 a.m. when I'm making this video, so markets just opened about an hour ago, but all the indexes right now are doing very well. We have the Russell up 0.5%. The Dow's up 1/4, not bad. The Nasdaq's leading the way, up 1.3%, and we have the S&P up 0.75% as the VIX is down over 4%. And now if I pull up this 20-day chart, you can see we have SPY slowly starting to break above this 180 SMA. You guys see that right here. And we're slowly starting to get towards the highs from the pre-market yesterday being about 442, 443, which I do have a 443 alert set right now on SPY. So this looks pretty good, guys. We're already above the highs intraday from intraday yesterday. Now we're getting again to the highs from the pre-market. So keep that in mind. SPY is really starting to gain momentum here. It's not fully breaking out yet, but it's getting pretty dang close. And we have triple Q, which is fully starting to break out on this 20-day chart, at least, guys. You can see now we're above the moving averages for the first time since the beginning of this month. So really, the first 3 weeks of August, I mean, now it's the 23rd, first 3 weeks, we were downtrending, and now really in the past day or two, we've been breaking out, and today's really solidifying the breakout now as we're above the moving averages here. We have a golden cross. You guys can see that. And we are now taking out the highs from yesterday pre-market being about 367.20. Now we're at 368.15, guys. Again, up 1.3% on triple Q. Bulls are definitely in charge on on the intraday, on the 20-day. They're gaining an edge here. They're starting to get in charge. So yeah, bulls are looking good on triple Q. Now the next main level I'd like to see it break is about 370, let's say. So let me set another alert here on triple Q because I think it just hit. My alert hit about an hour ago, or not even, probably about a half hour ago, whenever that was. I think I had one at 367 or something. So let me set another one at 370 now. Mark is at, we're above. There we go. And we'll see what it does from that point. What do you guys think? Let me know your thoughts down below in the comments. I'd love to know where your head's at as always. So let's go over these two companies that are completely in free fall, and one of them I can say I told you so. I mean, a lot of people told you so. It's Peloton, guys, which is one that I was very critical of a couple of years ago. You guys probably remember. And now their stock is down 23% after the company reported earnings this morning. Let me actually pull it up here and show you guys what they ended up doing. So it looks like they missed EPS on a GAAP basis, negative 68 cents EPS, which missed the negative 38 cents expected. So unbelievable. Their loss was way more than expected. And it looks like here sales did beat. Okay, that's good. 642 million versus the 639 million expected, it looks like here. So revenue beat, but again, EPS was just way worse than expected. And it looks like here, yep, oh man, that's bad. Q1 total revenue, they see Q1 total revenue, so guidance here of $580 to $600 million versus the $655 million expected. So there you have it, guys. There you have it, right? Guidance for revenue's bad. Yes, they slightly beat revenue, all right? But EPS was awful. So yeah, I mean that's why we're falling big time. I mean the fact that we're missing guidance on revenue, that's big, especially for a company that's trying to become a growth company again. That is not good. Not good at all. And you guys know, I mean, if you've been watching my channel for a while, this is nothing new. I've been very critical of Peloton, right? This was a company that did very well during the pandemic when everybody was locked in. They were ordering the Pelotons for home. The gyms were shut down. Everybody was working out at home. Some people were outside, obviously working out, but a lot of people were in their house, homes or apartments, whatever, working out. And that's when Peloton did very well. Obviously, you guys remember this. It wasn't that long ago. It's not like this was a decade ago. This was just 3 years ago. And Peloton hit $170 per share. You heard that right. And anybody with half a brain cell could have told you as things got back to normal, Peloton would suffer. And that's what I was saying when it was a lot higher. I mean, geez, looking back, I should have shorted this. I mean, I would have made a crap ton of money. I would have had one of the best trades of my life if I bought or if I, shorted it, or if I bought puts or whatever. But I didn't. Full disclosure, I didn't do that. But I remember I was against it when it was 95, 100, $125. And here we are at $5. I mean, down 23%. And again, I'm not surprised considering their losses are widening, which is not good, and their guidance is freaking pitiful. So let me show you guys the next one here, which is Foot Locker. This one's down even more, and I wasn't really expecting this drop again, considering last quarter we saw something very similar with Foot Locker. I'm not sure if you all remember, but we had a huge drop last quarter from $42 all the way down to $27 after earnings. Unbelievable. So honestly, I wasn't expecting that again to happen again. But the funny thing about the stock market, guys, is it doesn't care what you expect, what you think, what you want to happen. It's going to do whatever it does, right? The market's going to react how it reacts, and it's down another 34%, down $8, down to $15.30. Now, that's got to be a multi-year low on Foot Locker, right? Yeah, it's a low on the 3-year chart, which is, well, 3 years. That is a multi-year low. And on the max chart, let's see, when's the last time Foot Locker has been at 15, guys? Oh my gosh, has it been that long? Get the heck out of here. No way. Looks like last time Foot Locker was at $15, guys. Are you ready for this? 15, 16, this general range. We're talking 2010, guys. Oh my gosh, 2010. 2011, that was what, 12 years ago? So yeah, let's just say Foot Locker, the management team over there, the CEO, board of directors, they're probably scrambling right now. This is not a good look. Somebody's probably going to get fired, or maybe somebody already got fired and I missed it. But yeah, this is not looking good. Not looking good. To be at a 13-year low, 12-year low on the stock, guys, I mean, let's be honest. That's putting a ton of pressure on the management team, obviously, especially with it being a publicly traded company. So, yeah, I can't even imagine the pressure there. So let's see what's going on with Foot Locker right now. They reported this morning, a couple of hours ago. So it looks like they did EPS of 4 cents, in line with the expectations, all right, but they missed on sales. 1.86 billion versus 1.88 billion. And guidance, they updated it, sales guidance, from down 6.5 to 8% to now down 8 to 9%. So guidance is actually getting worse, which is not good. That's for sales guidance. It's going to be worse, guys, compared to last year, it looks like, or either way. It looks like full year comparable sales will be down. They see not 9 to 10%. It had been seen down 7.5 to 9%, so that's getting worse. On the comparable sales side of things. So yeah, I mean, it's getting ugly for Foot Locker, right? That missing revenue, the guidance getting worse. That's all, that's all we have to see for a stock to maybe not see this big of a drop. Geez, there's got to be some more worries there, maybe that I'm not aware of. But if you see those things, right, guidance getting cut or revenue miss, EPS miss, whatever it may be, that's a recipe for a stock to drop after earnings a lot of the time. Sure, sometimes it could go up for all we know because, like I said, the stock market has a mind of its own. But a lot of the time, guys, it collapses, right? And in this case, Foot Locker's collapsing, Peloton's collapsing, and full disclosure, I don't own either of these stocks. And to be honest, I don't plan on buying either of them, right? These are not companies that I'm interested in, guys. Sure, I've traded them. I've made some money with these two in particular over the past couple of years. Actually, I haven't even traded Peloton probably since 2020. But Foot Locker, I was getting in and out of. You guys know I've covered Foot Locker multiple times on this channel over the course of the last couple of years. But, I got in and out of it, and I haven't been in Foot Locker now probably for 2 years. I mean, it's been a while, and I am not touching it here as it's falling through the floor. Maybe there could be some value. I don't know. But I think Foot Locker's business model could be in jeopardy over the next decade with the way things are going, e-commerce. Sure, people will always go into the malls to look at Foot Locker, but then again, mall traffic is dying down, guys. Let's be honest. How many malls in your area have been shut down? I know where I'm at. The malls in my area, a lot of them are, going out of business, or a lot of the stores in those malls are getting shut down. There's less foot traffic. And the way I'm seeing it is, look, there's still going to be malls out there. Don't get it twisted, but there's going to be less malls. And I feel like the way it should be, guys, is there should be less malls. But I think the malls that should exist should be sick, right? I mean, there's the King of Prussia Mall in PA, right? That's in the area, in the vicinity where I'm at, right? And that's a sick mall. I'm not sure if you guys have been there. That's what a mall should be like, right? And that place has a ton of traffic. But these little malls that are in these towns, right, they're going out of business. There's less foot traffic. I mean, look, guys, it's happening all around, right? It is happening all around. So yeah, what do you guys think? Let me know your thoughts in the comments. Hit that like button. Make sure to subscribe, and don't forget to get up to 16 stocks for Moomoo. Once you open up your account using that link down below, and you fund it with at least $100, you get 5 stocks right off the bat, and fund it with at least $1,000, you get 10 more stocks, totaling 15 stocks. And mind you, each of those could be valued up to $2,000, guys. And if you fund your account with at least $5,000 on top of those 15 stocks, you also get a free share of either Tesla stock or Expedia stock, which makes this promo a no-brainer. And mind you, guys, that part of the promo is limited time, so get on it. Use that link down below. And with that being said, cheers. I'll see you in the next one.